trying to understand why it is that the Chinese economy have had such a slow rebound after COVID. And it's clear that it is still this real estate sector that is kind of causing this deflationary spiral that China has been in. Because I think if you ask the average Chinese person, they would probably say that it's getting more expensive.
Hello out there and welcome to this week's edition of GeoPortfolio. I am Mikkel Rosenvold. I'm the head of geopolitics here at Stena Research. And with me today I have again Anne live from Paris. Welcome to you, Anne.
Hello, Mikkel. It's good to be here.
Yeah, we are slowly seeing some moves towards spring weather here in Copenhagen. How are things in Paris? A bit warmer?
Well, compared to Danish standards, it's proper summer in Paris. It's been, I think yesterday, 20 degrees, so I'm not complaining.
Wow, yeah. Jealous of that one. Well, let's get to an even colder place called Russia. We have a couple of interesting topics today, so let's just start up with some of the topics I covered in my Great Game editorial here on Tuesday. Obviously, we looked at the Russian election. Not really any surprises there. It almost seems like old news as we enter the end of the week here. Obviously, Putin got his win. Some called it a landslide win. I think for it to be a landslide, something has to slide from one point to another. And I don't think anything really slided, if you can say that. But anyway, Putin seems to be in complete control, doesn't he? We had some protests in Russia. The Navalny camp, the supporters of the late election, Navalny urged people to go vote at noon. We saw some longer lines at around noon at each polling station. It was in my opinion, a very subtle way of protesting, but not anything that will really rattle the Putin regime. If you want to read more about the second point in my headline, can Nigeria keep out crypto, and read about the Nigerian war with the Binance crypto broker or crypto exchange, you should check out my Great Game article at stenaresearch.com. Interesting story there, but we'll not talk too much about that. Instead of talking about the Russian election, I think we are in Europe in the midst of heating up for some kind of an arms race with Russia, I think. We've of course seen a lot of talks, most recently in the European Commission meeting or a European Council meeting today regarding build-up of U.S. defense industry. Russia has responded with news that it's going to field 2 new field armies. We don't know exactly how many of these are new units, but it seems like some kind of arms race is going on between mostly Europe, to a lesser extent the U.S., and of course Russia. I just wanted to pull out one chart here. I don't know how visible it is on the video, but basically this is the GDP development from 1970 to 2021. The one line here, the red line, is the European Union. I'm not so used to using the finger here. I'm not a weather reporter. And the other line is obviously Russia. So back in time, Russia were quite a match for what we can call Western Europe. Today, the European Union has an economy almost 10 times the size of Russia. So why is Russia still a military threat? Is Russia a military threat? Well, one thing this doesn't take into account is that even though the Russian economy might be the size of the Netherlands, Russia has quite a few more nuclear missiles than the Netherlands. And that's, of course, one factor. Russia also has a lot of manpower, and that is obviously what they've been using. But it is interesting that the European Union will need to mobilize far less comparatively than Russia will to keep up an arms race, basically. And the question is, even though we're richer, are we more willing to invest these? So an interesting development. And of course, and we're going to talk more about China later, we're not counting in China in this equation. China more than makes up for the European Union. So that's another factor to watch.
100%.
So, and you're brewing on an article, which I'm very excited about. We've been talking a lot on the show about the U.S. economy reaccelerating. We're seeing some signs that this is spilling over into China. One of our key analysis right now is that the Chinese equity market could be in for a very, very strong period. If you're into investing in China, could be other Chinese proxies as well. You can read more on this on stenaresearch.com. But basically, we are seeing some early signs that perhaps China is heading for is working itself out of the COVID crisis. And I know, and you've been looking more at the Chinese consumers, perhaps not as stereotyped as these, but could you put some words into what you've been looking at?
Just first and foremost to comment on your last point there, I think Chinese manufacturing has seen slight promising signs in the first quarter of this year. But yes, as you correctly mentioned, I've done a little bit of a deep dive this week trying to get into the head of the Chinese consumer. Obviously, I'll never be able to fully do that, but it's interesting to kind of investigate the differences and trying to understand why it is that the Chinese economy have had such a slow rebound after COVID. And it's clear that it is still this real estate sector that is kind of causing this deflationary spiral that China has been in. Because I think if you ask the average Chinese person, they would probably say that it's getting more expensive to live. Like the average goods they buy in the supermarket and so forth is getting more expensive. But prices of rentals and real estate in general has plummeted. And it draws on so many very interesting cultural and demographic factors. If we want to take the story, rewind it fully, historically, the Chinese consumer, it has been the number one key is to invest in real estate as the primary way of the primary way of investing your money, because there's generally been a lack of trust, especially in the stock market. So investing your money in the stock market. So people have tried to build their retirement funds and so forth through real estate investments. But as we're seeing now that these boomer generations that has kind of pushed the once booming Chinese real estate sector, they can't really sell or rent out their properties anymore because the new generations coming in, they are smaller as obviously a result of the One China policy and also the very high youth unemployment. So there's too many owners and renters and too few people want to rent essentially. And it's very hard to kind of halt that spiral.
And it's going to be very interesting how the Chinese government attempts to alleviate this or solve this. I mean, the go-to solution for Western governments in similar situation has basically been to throw money at the class or the cohort of people now entering the real estate market. It might be what we see the Chinese government do, but it's going to be a very, very big political issue and a global issue. This Chinese real estate crisis.
Yeah. The obvious solution would be to try and increase essentially people's salaries, but there's just not the same culture for doing that in China. It can be seen as kind of a way to be almost lazy. It's a lazy way to do it. It's too consumerist, and they much prefer like investment in like industry investment approach to that. So that's kind of the way they're going about it, trying to create some more high-paying sectors in clean tech and semiconductors and so forth. But trying to increase just salaries, it's not really the same culture as we might see.
No, I agree completely. And this is perhaps another symptom that China is to some extent being trapped in the middle income trap, where they're still trying to develop this consumer class to be able to sort of pass on wealth from generation to generation. And it's there are some demographic challenges as well to that, especially in China. As you mentioned, Anne, just to wrap up some of the points, we're looking very much into this slight Chinese reacceleration that we're seeing. We're still waiting to see if the overall or the much wider US reacceleration will spill over into Europe and China. We're seeing some signs in Germany as well as that, and as well in China. One of the ways to invest in that has been and will be in commodities. We've already taken some profits on silver and especially copper related to this, but that's just something that we're going to be covering here at Stena Research over the coming weeks. So really looking forward to your deep dive into the Chinese consumer, and I think the Chinese consumer is at the core of much of the global economy for the coming decades. So an extremely interesting topic that I'm really looking forward to dive into alongside with you. That was all for this week's GeoPortfolio. Please leave your thoughts in the comments below. If you have any suggestions for topics that we should take up, please do so. Otherwise, remember that you can get full access to both Anne's article on the Chinese consumer and my weekly editorial Great Game, as well as our model portfolios, trade signals, etc. It's all on stenaresearch.com. You can either sign up for our free newsletter to get some of our content, or you can sign up to get the full content with a free 14-day trial. So head over to stenaresearch.com and have a look for yourself. Otherwise, we're going to be back next week. So thanks a lot for joining, Anne.
My pleasure as always.
Great. And we'll see you all next week. Thanks for watching.